All right, let's talk about the housing market, because if you've been paying attention, you've probably got a bit of whiplash. Everyone was bracing for a slowdown, but instead, we're seeing this really surprising surge in activity. So, what is actually happening? Let's dig in.
Yeah, so the market isn't just treading water, it is showing some serious strength. Just as we're closing out the year, right when you'd expect things to cool off, mortgage applications are just taking off in a way we really haven't seen for a while.
And when I say taking off, I mean it. We're talking about mortgage applications getting close to a 3-year high. This is not just some little blip on the radar, you know? It's a pretty clear signal that something bigger is shifting under the surface. So that leads to the obvious question, why? What's causing this? Now, the easy answer, the one you'll hear everywhere, is, oh, mortgage rates are falling. And yeah, that's part of it. But that is not the whole story, not even close. There's another much more critical factor at play that most people are totally missing. And that hidden driver, it's something called mortgage spreads. I know it sounds a little technical, maybe a bit boring, but trust me, this is the absolute key to understanding what's going on right now. So let's just break down what that means. Okay, so think of it like this. There's always a gap between the mortgage rate you get and the interest rate on a super safe government bond. That gap, that little bit of extra, is the spread. And what happened recently is that gap, it got smaller. It compressed. And when that happens, it's like opening up a whole new lane on the highway for mortgage rates. It gives them a ton of extra room to fall and fall way faster than they normally could. And this really nails it. Without that improvement, without that spread getting tighter, mortgage rates just would not have been able to drop below this really critical number, 6.64%. So that improvement wasn't just, a nice bonus. It was the essential ingredient that made this whole thing happen. So, what's so magical about 6.64%? Well, it turns out that based on all the recent data, this number acts like a tipping point. It's like a line in the sand where homebuyer psychology just completely flips.
And here's what we mean by a tipping point. It's the rate where demand seems to wake up from its nap. You keep rates above that line, and the market just kind of stays sluggish. But the second rates dip below it, that's when you start to see purchase applications really begin to climb.
6.64%. According to the data we're looking at, that is the magic number. Getting rates to finally fall below this exact level is what seems to have lit the fuse on this recent surge. So the key point is this. The improved spreads gave rates the extra push they needed to finally break through that barrier. Okay, so that's a pretty strong theory, right? But theories are one thing. Does the data actually back it up? Well, let's take a look at the story the numbers have been telling us very, very recently. And the proof really is in the pudding of the last 18 weeks. See, in the past, we'd see rates dip below this level for a week, maybe two, but then they'd snap right back up before anyone could react. This time, it's been different. We've had a solid, sustained 18-week run where rates have stayed below that 6.64% tipping point. So what happened during that 18-week stretch? Well, for 11 of those weeks, we saw positive week-to-week growth in purchase applications. That means for a majority of that time, demand was actively building. More people were getting in the game week after week. Now, of course, it wasn't a perfect straight line to the moon. There were 7 weeks in there that were negative. But when you zoom out and look at the big picture, the overall trend is, well, it's undeniably positive. So let's just put it all together. You've got more positive weeks than negative ones. But here's the real kicker, the thing that should make you sit up and pay attention. For all 18 of those weeks, every single one, we saw positive year-over-year growth. That's not a fluke. That is sustained, powerful momentum. Okay, so we've got the hidden driver, those mortgage spreads, and we've got the data to back it all up. But so what? What does this actually mean for you, whether you're thinking about buying, selling, or just watching the market? Why does this trend matter so much? The biggest takeaway here is that this isn't just a temporary blip. This isn't just one good week of mortgage rates that got everyone excited. The fact that this has been going on for 18 weeks straight shows that demand is now building on a much more solid, a much more durable foundation than what we've seen in a very long time. And that, of course, brings us to the big question. After years of all this volatility and uncertainty, could this be it? Could this be the start of a new, more stable foundation for the housing market? Now, obviously only time will tell for sure, but the evidence we have from these last 18 weeks, it definitely suggests the market's fundamentals are a whole lot stronger than many people thought.